It's Jack from Alpha Charts with the state of the market video. Today is July 29th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Before we get started, I just want to remind everybody that you can catch me at Twitter at AlphaCharts365. I share things there every single day, whether it could be scans, could be chart ideas, could be setups, could be whatever I think is important at the time. So please, if you're on Twitter, check out, or no, it's on X now, I guess, right? Anyway, AlphaCharts365 on there. If you really like my stuff, I do have a subscriber group. It's $10 a month. It's an educational service to keep people on the right side of the market and in the best names possible, right? It also tells you kind of when I think you should push on the gas and when maybe pull on the brake a little bit and trade a little bit slower. I think that is one of the most important things that we can do in this market. It's really built for everybody, but if you work full time, it's really built for you, because I'm going to do a lot of the work for you, and you're just going to be able to come in and hopefully make some money, right? All of these services, you can scroll through this if you're interested in reading it. So I won't tell you to buy or sell anything. It's your decision alone. But we do have good dialogues with a lot of my members about what's going on in the market and specific charts that they may be interested in. Again, it's to help you maximize profits while minimizing your risks on swing trading time frame. Your time is valuable, and so is your money. So I always try to provide extreme value. If you're interested, at Alpha Charts 365, click on the subscribe button. Super easy to do. I hope you guys can see this one. So this was testimonials somebody sent in. I've been following Jack on Twitter for many years and have benefited from his valuable insights to the markets and enjoy his weekly videos with new trade ideas. I can't tell you how valuable his scans are. I have hit dozens of home runs and countless singles from the names on his list. I don't have the time to search for new trades, so it's the first place I go to. And at only $10 a month, you cannot lose by subscribing to a service. The service is worth 10 times that at the very least. Thank you so much. This was from one of my members. And I do give every day, I give my best scan. I post it for them to pull ideas from. It's short, it's to the point, and it gets you the information that you know. So if you're interested, again, at Alpha Charts 365, click on the subscribe button on, X or Twitter, or whatever we're calling this now. Okay. Thank you. Let's get into these markets. S&P 500. We're at this resistance place. We had a nasty Thursday, nice little rebound on Friday, and we'll see, right? That's the best answer I can tell you right here. We'll see. I mean, this is, not the place where I want to get too aggressive, right? Because we don't know what's going to happen yet. It's giving us mixed signals. So S&P was up about 1%. RSP was, let's see, up how much? Is thinking about this now. Here you go, 0.49. So about half. Again, you had this kind of breakout and then this pullback. Still above all the moving averages, right? So you can't get too bearish about this. But again, not the best look. Looking at the Qs, they looked a little bit better, right? So the NASDAQ was up, if this ever comes up, 1.82%. Again, there is room to the upside, and we are above all of our moving averages, which are rising. So it was nasty Thursday, but Friday, not terrible, right? Again, staying above all the important key moving averages. Equal weighted, though, let's see, 1.82, and then equal weighted was up. Again, it's being a little slow this morning. It's probably my internet. Let's take a look. Let's go Xfinity. 1.62, so about the same. So did way better, way better than the S&P 500 versus the S&P equal weight. And if there is room to the upside, there's a decent amount of room to the upside here. So we'll see. It's holding out, right? So that's nice to see. IWM. So it's had this long-term resistance right here. We'll call it at 200-ish, right? There it is, at 200-ish. And now it's kind of, just consolidating. And we have this kind of volatility area. We'll see which way this breaks. That's going to give us a lot of information. But again, it was up, let's see, 1.29. And to round things out, we'll look at the mid caps. Mid caps don't look quite as good, but they were definitely up, and 0.81. Okay, and again, right at a resistance area, very, very, very similar to S&P. I'm sorry, to the IWM. Now, as you can see, all these charts are still above their rising moving averages. They're still in a bullish scenario. So is there, maybe some caution? Yeah, there's some caution in here. But I don't think it's like extreme caution at this point. That could change this week. But right now, definitely some caution. But not overly. Let's look at the sectors. XLF. Again, you see it's setting up bullishly. Here comes the 50-day to cross. That is, there's nothing really wrong with this chart. Maybe you say this trend line was maybe some sort of false breakout and it just wasn't ready and needs to pull back maybe to the 200-day, right? But no one's saying that this is like a top or the top. At least we don't know that yet. Not, now listen, if it breaks the 250-day, it'll be a different story, but we're not quite there yet. So it looks okay. SMH, did it ever break out? Let's find out. We've been talking about this potential breakout now for weeks, and it still hasn't. Now, the moving averages are catching up. So the good news is, if it fails here, we're going to break these moving averages quick, and that's going to give us a lot of caution. But it closed right basically at all-time highs, right? So again, nothing bearish yet to really see on this chart. It was up almost 2% on Friday. That's very, very positive. And even on Thursday, when everything was pretty nasty, it stayed up 1.8%. So it had a very good Thursday and Friday. Again, I'd like to see this, this area now hold, right? But this is not a bad look to things right now, which is good, right? Let's see what XSD did. That's the equal weighted semiconductor. So not quite at all-time highs, not in the same way, even close to the cap weighted. So it shows you how strong the NVIDIA chart is. I'm gonna switch that real fast just to see what that did, because we know NVIDIA is driving a lot of this semiconductor growth, and it is one of the leaders, and it was up almost 2% on Friday, right? That makes kind of sense. But again, made potentially a lower high here, so we're going to watch that too. That's a different video. XTN transports. Here come the transports. Again, a little bit of a rising wedge starting to show up here. Again, doesn't mean anything quite yet, but yeah, doesn't mean anything yet. This can absolutely, break out to the upside and keep going higher. There's nothing saying it can't, but just a little rising wedge there that, if it breaks down, it may come back to retest. Again, if you notice, I'm not saying we're going into some nasty bear market recession, depression, whatever. I'm just saying things are maybe gotten a little ahead of itself and maybe you need to retest logical areas. That's kind of what the market does. And that could still, a little touch of the 50-day still makes us a very healthy market, just in my opinion. All depends on your time frame, though. XHB. Here comes housing. Again, doing very well, but we are looking at maybe a rising wedge as well here, right? Right into overhead potential supply, right? So that if I'm in housing, I'm being cautious, right? As an indicator, there's nothing wrong with it yet. But again, I'm going to watch for a potential break of this rising wedge. It's there. We're starting to see it on a few charts. So let's just be careful with that. Setups are just that until they confirm they're just possibilities. All right. That's XHB. Let's look at ITB, see what that looks like. Again, I like to look at both housing stocks. Yeah, we got this right here, right? And it's really not terrible, this one. ITB is not bad at all. I don't see as much of a rising wedge on this one. Um, now you have this potential area. I'm going to even get rid of this because it doesn't really help. Yeah, it doesn't really help much. But you have this potential area now, potential resistance. The bigger picture is still very bullish. So housing, in my opinion, still looks strong. Looking at the ETFs, let's do a quick summation. They have potential to break down, but nothing saying they're going to. So that's a positive, right? Volatility is checking in, and so this next week or two, coming into seasonably soft area of the market, we'll see, but nothing wrong yet. Let's look at the internals, right? Maybe they're going to give us a clue on which way. Maybe they won't, right? Sometimes we don't get what we want, but let's look. VIX, super low VIX, still at 13.34. Again, it's in a bullish range until we get a real spike back. That is a bullish range. That's the way to spin it, right? Looking at credit spreads. So this is one that we were at a trend line, and let's see if it's below it, above it. What's it doing with my trend line I drew? Starting to break down from that trend line, right? Again, maybe this trend line wasn't valid ever. Who knows, right? But that's a positive. And this would be the next, kind of area, right? So we'll just draw that in there from now that we could watch. But as of right now, credit spreads declining to tightening, we'll call it. That is bullish, period. Put call ratio, coming off of this more extremish, now close to extreme bullish reading, didn't really get quite there. But leaning bullish still, but nothing extreme. So there's really no signal. I'm looking at breadth, small decline, but overall, breadth is holding up just fine, right? As of for now. Now, again, eventually we're going to get a, decline. It always happens. I wouldn't be shocked if we get one more thrust up into this 80-ish area. That could be a place where we want to maybe start to, for sure consider, some sort of pullback, right? That's where I consider extreme. Again, it doesn't quite have to go up there all the time. You see, we saw a pullback here, so we'll see. You saw a pullback here. Every market's a little bit different, but I think once you get to 80% or above, that gives us a pretty good extreme reading. The DXY, the dollar, that's been driving a lot of this market. And we are starting to see that rise in the dollar. It's kind of flattened out the last day or so, but this is definitely something I'm watching. And if it continues higher, right? If it continues higher, it could put some pressure on the markets. ENX, almost done here. Bond yields, again, top of the range. This looks more like it's a bottom than a top, right? And let's go to the weekly or even go to the monthly chart to really look at this. I mean, when you look at this on the monthly chart, like bonds could go to 5. I've been saying this now for a long time. We could see a bonds at 5. No one knows the timing of it, but that looks like a bull flag, right? So just something to consider. And then let's look at, we'll go back to daily here. That was a monthly chart, right? When we talk about monthly charts, we're not talking about like tomorrow. We're talking about, over the next months or even potentially years, right, to see this. So anyway, let's look at the copper gold ratio and sum it all up after that. Here comes copper gold. Copper gold ratio, still mostly healthy above my, this green line, which I think is going to pop in here any second. There it is. Pretty big area, but we're still above it. I think that's a positive. We dipped up back down below it, and I'm going to get, maybe a little bit more cautious, right? That's my best word today is cautious. So that's what we got for you. Sum it all up. Markets are still overall healthy. That Thursday was potentially, a little shot to say, hey, you know what, maybe we're due for some sort of sideways movement, maybe a little wobble in here. And so depending on your time frame, your risk tolerance, what you're holding, how far up you are, if you're not up on them, all that kind of stuff. This can, maybe that was a little warning for you. But again, nothing overly bearish on these charts yet. Don't forget, catch me on Twitter at AlphaCharts365. This my subscriber group. I really think that you guys would get a ton of benefit out there. Consider joining. It's $10 a month, super cheap. Everyone can afford it. Anyway, y'all have a great week. Good luck out there. Bye bye.